Hello friends and welcome to my YouTube channel Simply Stocks, and today I'm going to talk about Shipping Corporation of India, what needs to be done at these levels and whether these are good opportunities to buy into the stock. So let's get started. First of all, a disclaimer that this is not a stock recommendation. People taking any position to any share that I talk about should do that with their own due diligence and research, and I'm not in favor or against any company that I talk about. Before I talk about Shipping Corporation, here's a small request. Kindly support me on Patreon. Once you do that, it will help me grow the channel, help you also ask me questions and eke out answers in greater detail. Once you get the $10 membership, you'll have access to my portfolio, my watch list, and a number of podcasts that I put up from time to time. Also, if you can pay $100 upfront, you get 1 year access by paying for 10 months. If you cannot pay on Patreon, you can directly get YouTube membership through other payment methods. And also, if you have a number of stocks or portfolio that needs to be assessed or something of that sort, you can directly email me and we can have a one-on-one conversation. Now, about the company, established in 1950, they are the manufacturers of commercial and combat ships as well as you can say ports, developing ports. Was a gem in 2003 to 2008 bull run. In fact, these kind of companies which are into capital goods, shipbuilding, etc., were regarded as one of the best during that time. You name it, in real estate, construction. But at the moment, from 2008 till now, over the last 13-14 years, it has done virtually nothing. They also make tankers, bulk carriers, and docks. The market cap of the company is 4,800 crores, and it has come down around 20-25% from the top. If you look at the financials, so these are Q3 numbers. The results were pretty good. So sales went up by 70%. Profit was around 290 crores, was up by nearly 2x, more than 2x over this period. There's high government holding here. Debt is reducing, but ROE is not that great, although margins have improved to 12% from single digit margins. But ROE is not that great, and numbers are good because of the fact that last 2-3 years have been extremely poor. So on the back of very very subdued numbers, the numbers look extremely good at the moment, and the stock has also surged a lot. So when I'll discuss about the technicals and the stock price performance, you'll understand as to what I mean. So in terms of performance, stock has done very well in 2021, and this is what I am saying, that from FY20 the numbers have scaled up sharply. So the stock has gone up a lot, from around 35-40 rupees stock went to 120-130, even I think 140-145 rupees, currently around 100-103 rupees. It has been a five bagger since 2020. So as I mentioned, from 30-35 to 140-150 rupees, but it has gone down 30% or more in this year after the, you can say, the small cap meltdown. And numbers for Q3 has been strong, but again, as I said, these were expected because these were all expected with the run up that the stock has already produced. Or you can say it in other way, that since the stock has gone up so much, so even numbers of such proportion will not propel the stock higher from here. It is a very good dividend paying stock, as many of the government companies are. But interest rate hike will impact such companies as Shipping Corporation or into capital goods, infrastructure, real estate. These companies will be impacted. So over the next 6 months, things could get extremely tough for these businesses, and probably that's why it peaked out by the end of 2021, the stock price per se. So why was the up move at the first place from 30-40 rupees? PSU went back into fashion, so something like a BHEL, something like a BEL, something of this sort, Bharat Dynamics, and then you had all these kind of companies, Shipping Corporation, etc., all came into focus because of the fact that there were talks of disinvestment in many of these companies, especially BPCL and many others. But most of these, or 90% of in the listed firms, in fact most of the listed firm, nearly all, did not see any disinvestment because of the conditions of the economy here in India, because of the pandemic, etc., over the last 1 year. Another reason for the up move has been the high promoter institutional investments into the stocks, and results remained strong. So what happened was, in 2020 March April, the stock had fallen so much, around 25-30 rupees, that and the results were expected to be better than compared to FY 19-20. So the stock price and this anomaly had to be corrected. So the stock price went up, the results came in, and at 140, rupees, everything got priced in. So that is basically what has happened, and so the stock has fallen from those levels. Small caps went up a lot from those lows of 2020, and over the last 1.5 years we have seen the surge happening. So valuations were extremely attractive at around 30 rupees. Valuations in my opinion were extremely stretched at 140, 150 rupees. Hence we are seeing the stock at around 100, rupees. If you look at the technicals of the stock, then there is strong support around the 90 levels. Probably a 10% decline from here on in could be a good level to buy into. But if you can buy as a trade right now, then keep a stop loss of 95. If you buy around 90, 92, then the final stop loss is around 80. Even if you're having long-term position in the stock, have a long-term stop loss of 80. These kind of companies, especially companies which are into debt and which are into high gestation period, which are into this capital goods and all sorts of this sort of businesses, you need to be extremely careful of to invest into at this point of time with the interest rates going up here in India. Yes, you can look at debt free companies, consumer oriented companies, or not consumer oriented but other companies in other sectors which are extremely debt free and having a lot of cash. Those companies will continue to do well. So, in my opinion, what one needs to do is probably buy with a stop loss. That's just about it, and keep track of developments. And if you can avoid these kind of stocks, it would be better. If you are having the stock, keep a final stop loss at around 80 rupees if you can, and have only 5% exposure into such stocks. So, this was my video on shipping corporation. Please like and subscribe my channel, hit the bell icon so you can get my video straight away when I post it. Thanks a lot for watching.